Are you looking to get the lowest interest rates you can get on business funding? Well, that's exactly what we're going to talk about during today's training. We're going to talk about exactly what lenders look at to determine risk and determine the interest rates you get. We're going to talk about the funding programs that offer you the absolute lowest interest rates. We're going to talk about how to get the lowest interest rates on any kind of funding program you qualify for. I'm going to give you my best tips and tactics along the way to get the most money at the best terms for your business. And if you stick around to the end, I'm going to get you access to my special guide on 27 killer ways to get money to fund your business. We got a lot to cover, so let's dive in. So if you're looking to get the best interest rates on funding, there's a lot of things you need to know. So let's decode it. First of all, what a lot of lenders look at is risk. And when they determine risk, they look at things like how long your business has been in operation, what kind of actual risk your industry has itself. They're going to look at credit scores, personal and business credit scores. They're going to look at your income, how you actually manage things like your bank account. So these are just some of the many factors that tie into it beyond fundability. So you want to first make sure your business is just structured the right way. Have an actual entity set up, preferably a corporation or LLC. Make sure you actually have a business address, a business phone number, professional website, professional email address. Get a business license if you can. Make sure you set up a business bank account and actually use that as bank references on application for funding. That goes a long way to helping you get the best interest rates for your business. Now, the next thing you could do to get the best interest rate is make sure you build your business credit. Look, it's not easy or it's not hard to do if you follow the right steps. So you want to make sure you get your DUNS number from Dun & Bradstreet. And you can get this at creditsuite.com/DUNS for absolutely no cost. Matter of fact, you can go directly to Dun & Bradstreet and get it for free as well. It takes about 10 to 15 minutes to complete the application, but it goes a long way to helping you establish credibility for your business. Then start getting some accounts that report to the business credit reporting agencies. Places like Uline and Granger, for example, will give you credit lines when you have none. They report to the business credit reporting agencies, which will help you establish business credit. So by establishing business credit with Dun & Bradstreet, Equifax, and Experian Commercial, you can have a credit profile with a low credit score, and lenders look at this to determine how much money you should get and the interest rates you'll pay. So the key to getting low interest rates is to make sure you build business credit and pay your bills on time or early to have great business credit scores, so lenders will want to give you the best interest rates out there. Now, of course, the longer time that you are in business, the better your personal credit scores are, and the better you manage your bank account, the more likely you are to get low interest rates. So make sure that you have more money coming in the bank account every month than going out. Have a positive ending bank balance at the end of every single month. Make sure that you have a lot of deposits, not just a few. Make sure you avoid NSFs. This kind of responsible bank account management will go a long way to helping you get the best interest rates. But interest rates aren't just based on all these qualifying factors. They're also based on things like, for example, your industry code. So do you know what your NAICS code is? Well, you should. So go to NAICS.com, and NAICS.com, you can actually do a lookup. You can find exactly what your NAICS code is or your industry code is, and make sure you avoid high-risk industries. Look, you can easily do a Google search for high-risk NAICS, and you'll get a list from the NAICS system telling you, hey, these are all the actual industries that are high risk. Try to avoid names and indicators that indicate you're in those industries. That'll go a long way to helping you get the lowest interest rate. But beyond all of this, it all also comes down to the type of loan program you're qualifying for. So the lowest interest rates you're going to get on business funding come from what's called asset-based lending. And this quite simply is where you're pledging an asset as collateral for the debt. So if you have some kind of collateral to offset the lender's risk, that will always give you the lowest interest rates that exist. As a matter of fact, if your customers pay you on terms and you have account receivables, that'll give you some of the lowest financing terms that's out there, less than 2%. If you have things like stocks, bonds, 401ks, IRAs, inventory, even equipment, you can oftentimes use that to pledge as collateral and get interest rates less than 5%. So the key to low interest rates when it comes to funding type is to have some kind of asset to offset the lender's risk. This is called secured financing. You're securing the financing with some kind of collateral. Now, beyond that, we look at SBA loans. SBA loans are probably the next tier of low interest rate funding, but it's not just the interest rates that make them so appealing, it's the term. So with SBA loans, not only can you get low interest rates, you can get longer terms, which help you get a lot of money and keep your payments very low. But in order to get an SBA loan, you need to have an asset equivalent to the amount of money that you're borrowing. You also need to have things like cash flow verifiable with 2 to 3 years of tax returns. You also need to have good personal credit and established business credit. So if you have those things, then a well-established business can come in, get SBA financing, and get low interest rates, long terms, and very low payments. Now, beyond that, we start looking at riskier and more expensive money. And the easier money is to get, the more expensive it's going to be. So if we look at a program like cash flow financing, for example, merchant cash advances, where you can get money in 72 hours or less just because you're managing your bank account responsibly, well, that's fast, easy money. You can get it with bad credit. It's unsecured. You don't need to have any kind of an actual asset to secure the lender's risk. But the trade-off is you're going to pay high interest. Oftentimes, that's 10, 20, 30% or higher interest rates. So the trade-off of fast, easy money is that you're going to pay more in interest, which, let's be honest, doesn't really matter if you're using the money you get to invest in something that gives you a really high rate of return, especially if you're getting that return quickly. But keep in mind that the faster, easier money is also going to give you the higher interest rates. So now you know everything you need to know to be able to get the lowest interest rates on business loans, credit lines, and credit cards. So how do you actually tap into financing? Well, make sure you grab my free guide at creditsuite.com/27 ways to be able to grab our key ingredient to 27 killer ways to get money for your business. Look, a lot of business owners think they can't get money, and they can. They just don't know that a lot of the lending programs that are out there actually exist. This guide at creditsuite.com/27 ways will give you everything you need to know to tap in to get the funding for your business you deserve to get. Now, beyond that, also give us a call. We'll do a free assessment to tell you all the funding you can qualify for now. We'll do a fundability check to help you improve the aspects of your business that lenders look at to help you get the most money at the best terms. And you can get that consultation by scheduling online at creditsuite.com/consult or giving us a call at 877-600-2487. Now, also, if you got value from this training, make sure you like and subscribe and keep your eye out for our next training where we talk about more cool ways to get money to start and grow your business.